We're getting ready now here in section 4 to talk about the chart of accounts. The chart of accounts is probably the most important thing in QuickBooks. Every single thing in QuickBooks will flow through the chart of accounts somewhere. The chart of accounts is basically a listing of different areas where you might actually spend money or you might receive money as well. And you want to make sure that your information goes into the correct categories. That way when you run reports, you have accurate information. There is a part 2 to the chart of accounts. Make sure you watch both parts so that you have a really good understanding of how the chart of accounts works. Let's go ahead and flip over to QuickBooks and we'll get started. There are a few different ways to get to the chart of accounts. One way is to go through the gear icon, and in the first column you will see the chart of accounts. Another way is just go over to the left and click on accounting, and there you will see the chart of accounts as well. And this is what your chart of accounts looks like. Remember that every single thing in QuickBooks runs through one of these. That's why it's so important that this is set up correctly. But let me quickly give you a quick overview of how the screen looks. You'll notice the first column is the name of your account. When you're setting these up, you can pretty much name these accounts anything you'd like, but make sure that you name them something that makes sense to you or whoever happens to be looking at your reports. The second column is the type, and notice that it's currently sorted by type. We're going to be going through all the different types so that you will know which ones you need to set up to make sure that you have everything you need. I want you to notice also that when you're looking down this list and you see the type, for example, income, notice that the names are alphabetical, and that will be true of each of these types. If you look at the expenses here, then these are alphabetical. If you want to turn on general ledger numbers, you have the option to do that, and let me show you what it will look like if you do. You'll actually go up to your gear icon, then you're going to go into Account and Settings. Then you'll want to choose Advanced on the left-hand side. And under Advanced, you're going to see an option that says Enable Account Numbers right here. Currently, they're off. If I choose On just by clicking there and choose Enable Account Numbers, notice that turned it on, and I can show account numbers and then save, and I'll show you what this looks like. Now let me go ahead and close this, and you're going to see now that you'll have a new column at the beginning here where you can actually go through and put in your own account numbers. There will not be any here automatically. You have to add them. The way you would add them is the way you would edit any of these accounts. Just come over to that line that the account you want to edit is on. You'll see a down arrow and you'll choose Edit. And in this window you have the opportunity to add your new account number right here. I'm going to go through this screen in a minute, so I'll just close that for now, and I'm going to go back and turn those account numbers off for just a moment. Account and Settings. It's going to be the Advanced option on the left, and I'm going to go ahead and turn off Enable Account Numbers just by clicking that word on, and I'll uncheck these and save that. Now let's go back and finish going down our list here. The next column that you're going to see next to the type is going to be the detail type, and that's just telling you a little bit more information about the type that you chose. There's also the QuickBooks balance and the bank balance. The QuickBooks balance would be if you had entered some transactions in QuickBooks, what is that balance for that account? The bank balance column will allow you, if you pull in your entries from the bank, that's called downloading your transactions, then you'll see what that balance is as well, and you can see that you can match those up and see if you're in sync here. And we'll be getting into that a little bit later. But right now what I want to do is start talking to you about the different types of accounts you'd want to add, and then we'll add a few so you can get a feel for how this works. The first type that I want to talk about are bank accounts. You'll notice there are no bank accounts at the top of this list. That means that right now you do not have a checking account, you don't have a savings account, any kind of bank account. You have the ability to add these. You're going to be doing this by clicking over here where it says New. And the first thing you're going to do is pick the account type. In this case it will be bank, but notice all the other types we're going to be talking about. Where it says detail type right here, just go ahead and pick the option from the list that closely matches the account type you've chosen. Over here is the name of the account. When you name your account, you can name it anything you want. If you want to call it your bank name, you could do that. If you want to call it operating account and maybe another one called payroll account, you can do that. Just whatever you like to name it. I'm going to go ahead and leave it on checking for now. Description is totally optional. And there's not a sub-account right now, but later on I'll talk to you about how sub-accounts work. The other thing you want to think about is a start date to start tracking the money in this checking account. Now what you want to do is, if it's the beginning of the year like it is currently, then you probably want to go back to January 1 or the beginning of your fiscal year and put in all the entries. If that's the case, then you can choose beginning of this year. You might decide, if it's later in the year and you're starting your QuickBooks file, to go ahead and start with the beginning of that current month. You can also pick Other. The reason you might want to pick Other is, what if you have a bank statement that cuts off in the middle of the month? That would be an option where you can tell it a specific date to start with. It really doesn't matter what date you start with, just try to make it correspond to the start date of your bank statement. I'm going to go ahead and say beginning of this year, and I'm going to go ahead and put in the balance. The ending balance on 12/31 of 2019 would be the exact same number as the beginning balance of 1/1/2020. You'll want to get that number from your bank statement. I'm going to go ahead and say it was $250.62, and I'll go ahead and hit save and close at the bottom. And now you'll see at the top you have a checking account and you have a balance of $250.62. You also have the ability to view the register. I just want to show you that real quick. If I come over here to view register, then this is what the checkbook register actually looks like. I'm going to close this. This is just some information on what a register looks like and what it's supposed to do. Anytime you want to go back to the chart of accounts, you'll notice right up here it says back to chart of accounts, and that's going to take me back to the screen. Now I also want you to notice something that happened. Anytime in accounting you do something like this, then you will have a debit and a credit for that transaction. You'll notice that in this case, the flip side of the money went to an account called opening balance equity. And that's the way it should be. You can't change that. Just know that whenever you have a starting balance, which could be a minus number if you have a loan, but this is going to be an actual picture of what your books look like. So don't freak out if you see a negative number there. It's an accurate picture of your books. Let's go ahead and talk about some other bank accounts. You obviously would have savings, money market accounts, things like that. But think about, do you have PayPal? Do you accept Square? Those are bank accounts as well. So if you do accept those, then you want to set those up as bank accounts. What would eventually happen is you would transfer money from PayPal or Square into your checking account, or sometimes you go the other way, but those are just bank transfers. The next type I want to talk to you about are your assets, and you'll see there are a couple of these here. An asset is something that your business owns that makes it more valuable. You're going to have equipment, you're going to have chairs, desks, lamps, vehicles, property. Assets fall into one of two types. There are fixed assets, which are things you plan to keep long term, like the vehicle or the property. Then there are what we call more liquid assets, or QuickBooks calls them other current. Inventory is a great example of that, because I'm worth more right now because I have inventory in the back room, but my goal is to sell it and get it out the door. Now what's going to happen with assets is you're going to set up big bucket categories. And what I mean by that is, instead of listing each vehicle the business owns, you're going to have a category called vehicles, and they'll all dump into that one category. You don't want to have 100 different categories for your assets, because no one wants to sit there and look at that. Just have big buckets, maybe 7 to 10 good ones. Some of the common ones that I see are vehicles. You might have one called furniture and fixtures. You might have one called property if you have a lot of property. You might have equipment. But again, they're just big buckets. This is where the accountant's going to be very helpful to you, because the accountant's going to help you decide which categories to set up. And also when you start talking about the money part, then the accountant's going to help you plug in how much the vehicles were worth and depreciation and things like that. QuickBooks does not do depreciation, and that's because there are multiple ways to do it. If you had 10 accountants, they might all tell you a different way they want it done. So just know you want to have the account set up so that if you go to the bank to get a loan, for example, the bank will know that you do have some assets. We're going to move down the list, but before we do, I want to go ahead and stop the video here and have you go over into part 2, and we will continue talking about the different types that you'll need to set up. We're in section 4, and we've just talked a little bit about how to start setting up some of the accounts in your chart of accounts. I want to go ahead and finish telling you how to set up the rest of those accounts. So let's flip over to QuickBooks and we'll keep going. The next type that I want to talk to you about are what we call your liabilities. A liability is something you owe. Now, I'm not talking about the monthly payments you have to pay for the electric bill, things like that. What I'm talking about is a loan you've taken out of the bank. When you think about your liabilities, there are really two types. There are what we call long-term, which are things that you're going to pay on for more than 12 or 13 months. And then there are short-term, which is under a year basically, and QuickBooks calls them other current liabilities. When you set up your liabilities, you want to set up a separate one for each loan that you have. And when I say loan, it could be a car loan. It could be you as the owner decide to set up a loan where you put money into the business and you want to get paid back. You might have borrowed from the bank. Those are all different liabilities you want to set up, and each one should be set up separately. Let's set up a car payment so you can get an idea of how you would set up these accounts. I'm going to click on New. And the first thing it asks me is to pick the account type. Here, you're going to see your other current, which is the short term, and your long-term liabilities, which is what I'm going to choose in this case. Another thing to notice is that where it says detailed type, if you see notes payable, that's just an accounting term for a loan, basically. Over where the name goes, this is where you're going to pick the name that you want for your loan. I'm going to call mine the Bank of Any City, but you can call this anything you want. Sometimes what I'll see people do is put the last couple digits of their account number here, just so that they can see which loan they're looking at when they have it pulled up in front of them. Description is totally optional. This is where you might say that this is my 2019 Jeep Cherokee loan, or you can leave it blank. And then we're going to have to pick a start date. Now remember, if we're starting our company the beginning of the year, what you'll want to do is for your beginning balance here, find out what the amount you owed as of, in this case, January 1 was, so that you can plug that in. It's not the amount you started with when you purchased the vehicle 2 years ago. It's the amount you owed as of the start date of your company file. I'm going to put $15,000 in here, and then hit Save and Close at the bottom. And now what you're going to see is that you have a loan right here. Notice it says Bank of Any City, and the balance is $15,000. Every time you make a payment on the loan, this is the account you want to put it to. Your car payment is not an expense to the business. Do not set it up as an expense account. It is a loan, and you want to know when you've paid off the loan. You'll also be able to, on each individual check that you write, you're going to be able to put in how much is principal and how much is interest there. The other thing I want you to notice here is look at your opening balance equity. It's a negative number, and that's because I said that when you owe something, it's a negative number. And this is an accurate picture of what your books look like. Let's talk about credit cards a little bit. And I'm talking about credit cards that your business uses to purchase items for the business. This has nothing to do with accepting customer credit cards. You want to set each credit card account up separately so that you can track each one. I'm going to go ahead and set up a new one for you. The type is going to be credit card. I'm going to name my card. I'll just call it Visa. And I'm going to pick the start date of my company file, the beginning of this year, and the starting balance would be the starting balance from my January bank statement. If you don't have your January bank statement, then you can grab your December of 2019 and plug that number in. I'm going to say it was $2,500, and I'll save and close. And now what you should see is that you have a credit card and you owe $2,500. When you make a payment towards the credit card, you're going to actually put it to this account always. Do not try to break it up that so much is gas and so much was meals, because there is another way to do that in QuickBooks. All the payments go directly to the credit card account. Going down the list, the next type that I want to mention is where you see equity. Equity basically means equal. If you think about it, you're the owner of the company. When you take money out, that's considered an owner draw. When you put money in, it's considered an owner contribution. Now they've got some other terminology. You'll notice owner investment is when the owner puts money into the business, and owner pay and personal expenses is when the owner takes money out of the business. What I don't want you to do is make a deposit from your personal account and consider it income. It is not income to the business, it's considered equity. The next type that I want to talk to you about are your income accounts. I'm going to scroll down just a little bit here. You're going to see that there is one called sales income, and typically when you make a sale for your business, this is the account that you want your sales to dump into. You can have a few extra ones added if you'd like. Maybe you have different areas that you do business in, and what I mean by that is in your company, maybe you have different things that you do, and you'll want to actually set those up so you can see how much income you're getting from each one. That's certainly okay. Keep that list pretty short though. No one wants to read 50 different lines of income accounts. But sales is normally where you'll see most of that go into. The next thing I want to mention is your cost of goods sold. Think about the things that you have to buy to make a product or service in your business. You have to buy materials. You're going to need subcontractors sometimes. Maybe you have freight that's part of that. Anything that you have to buy to make a product or service in your business is considered a cost of goods sold, and you want it to show up on a profit and loss as being deducted from your total income. The largest grouping that you're going to see are your expense accounts, and you'll see there are a ton of these here. You'll also add a lot of these. Let me show you how to add some sub-accounts so you'll see how this works. Let's use car and truck as an example. We have the main account here, but I want to add a sub-account called gas and maybe another one called repairs and maintenance. All you're going to do is go back up to the new option in the top right of your screen here. You are going to create a new account, and it has to be the same type as the main account. So that means this one has to be an expense account. And in this case, it is auto. And I want to name this one fuel. What I'm going to do is check it's a sub-account of, and then from this list here, what I'm going to end up picking is car and truck. So see how that fuel is a sub-account of car and truck. And when I click Save and Close at the bottom, I want to show you how sub-accounts look. See how fuel looks like it's indented a little bit? That's a sub-account. And there's going to be a lot of these you'll want to add. When you're going down this list, think about insurance. You might have general liability. You might have auto insurance. Those would be sub-accounts of insurance. Going down under legal and professional fees. Often what I'll see is accounting and the attorney will be sub-accounts of legal and professional fees. And you can just come down and make this list look any way you want. There's utilities at the bottom. You'll want to have telephone underneath, gas and electric, any of the utilities that the business pays. That's going to give you a quick overview of setting up your chart of accounts. Make sure you spend some time on this and get it set up the way you want it. You want it to be as detailed as you need it to be to get your numbers, but don't make it so detailed that no one wants to read it. You can always set up accounts later as you go along as well, because you're not going to catch them all right away. Well, that's going to wrap up the chart of accounts. Let's go ahead now and move over into Module 4, and we're going to talk a little bit about working with accounts receivable, and we'll start with learning how to set up customers.
If you're not a subscriber, click down below to subscribe so you get notified about similar videos we upload. To get a free QuickBooks Online Essential Keyboard Shortcuts infographic, click over there. And click over there to watch more QuickBooks videos from Simon Says It.